All right, and we are live. So welcome back to Dapp University. So today we got a lot to talk about in our live stream. We're going to talk about a big update for Ethereum 2.0 that just happened. Okay, what this means for the release of Ethereum 2.0. When's it going to get here? I'm going to answer my opinion on that because nobody really knows for sure. We're checking the crypto markets. Answer some of your questions, look at a lot of other updates that have happened in this space since our live stream yesterday. Again, we do these live streams Monday through Friday in this channel. Just subscribe, turn on your notifications. You're going to find about those whenever we go live. So if you're new around here, hey, I'm Gregory, and on this channel, I turn you into a blockchain master. So if that's something that you're interested in, then smash that like button down below for the YouTube algorithm and subscribe to this channel. And if you want to have master blockchain step-by-step from start to finish, then head on over to dappuniversity.com/bootcamp to get started today. So we got people jumping in the chat here. We've got Culture Hives, David Stone, Technically, Lee, Venture Warrior, Anthony, Dirk, Nikki, Danny Jacob. Welcome, welcome, welcome. All right, so let's jump into this. Let's talk about a big update for Ethereum 2.0 that just happened, okay? So let me pull this up on my screen here. So yesterday we got an update that the Mainnet shadow fork was a success for Ethereum 2.0, okay? So the blocks are finalizing. Everything looks solid on the execution clients. Congrats to all the hardworking teams. And we can actually see the status of all that live right here on this website with ETH stats, okay? So I'm going to put a link to this in the live chat replay if you want to check out some of these stats yourself. Let me explain what this is and why it's important, okay? So, Ethereum 2.0 is the long-awaited improvement of the Ethereum that we know and use today. Everybody talks about Ethereum's too slow, it's too expensive to use. But some people know that, hey, like, that's not the final state of Ethereum. Now, Ethereum 2.0 is not necessarily going to fix all that stuff. We'll talk about that here in a minute. But I think a lot of people know that at this point, if you don't know, I hope you know now, that we're transitioning to something called Ethereum 2.0, which it's kind of funny. They're not even really calling it that anymore. Ethereum is getting upgraded. I'll just put it that way. I still call it Ethereum 2.0 because that's what lots of people know the name by. But we're on this multi-phase roadmap of doing that, and we have something really big in 2022 called the merge, which is basically going to make Ethereum proof of stake. It's going to make the Ether, the asset itself, most likely deflationary, assuming the network activity stays the same. And the big update that we saw yesterday is what's called a shadow fork for the Ethereum 2.0 merge. So what on earth does that mean? Okay, so right now, ETH 2.0 is alive. It's actually working, kind of, on its own blockchain. Okay, so if you're using Ethereum today, you're like trading tokens around, you're sending Ether, you're flipping NFTs. You're using Ethereum 1.0. Hasn't changed yet, still proof of work, not proof of stake. The proof of stake Ethereum 2.0 blockchain exists over here. It's a one-way street. You can send ETH to it. You can't really go off and make transactions on it yet, but it's going to get merged back into Ethereum 1.0. And whenever that happens, ETH is just going to be all Ethereum. There's no, like it's just going to be one blockchain, and it's going to have proof of stake. So, and that is going to happen. I'm going to tell you when here in a minute. But before we get to that point, basically, we have to practice creating this blockchain, and well, I say practice creating the blockchain, practice merging the two blockchains back together, okay? So there's different ways you can do this. You can do it with a test network where basically you don't do it with any real money, right? It's just like this fake blockchain, and then you practice the merge, and you do that driving a couple times. But then we have this thing called a shadow fork, which is a little more official, I would say, than just doing a test network, and that's exactly what we're seeing here. So we saw a shadow fork merge successfully completed yesterday, which is good news for the Ethereum 2.0 merge, because you have to understand, like, when you're talking about making changes to public blockchains, you're talking about a massive network, okay, that's securing billions and billions and billions of dollars of value, on top of it. And so whenever you make changes to that, you have to really, 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 really make sure that, it's executed successfully. It's like the old adage, it's like measure twice, cut once. If you're in carpentry or something like that. Well, this is like 10 times crazier than that. This is like measure 1,000,000 times and cut once. Okay, so but the fact that we are doing this, and every iteration of testing is getting better is good news for the Ethereum 2.0 merge. Now, when is this going to happen? So I made a video about this recently. We've seen lots of people talking about high hopes for the Ethereum 2.0 merge or the proof of stake merge, whatever you want to call it. This big upgrade for Ethereum that everybody's talking about, the merge, whatever. There's lots of people who have high hopes it's going to happen in Q2 of 2022. That's been the talk for a long time. I made a video recently saying I don't think that's going to happen. And there's still people holding on and saying, hey, I'm watching the updates. Like, we're still shipping Q2 2022. I don't think it's going to happen. Okay. So that being said, I do think that there's an optimistic timeline that this could happen in Q3 of 2022, based on the fact that these updates are being successful. We're not seeing significant delays every time this happens. So we have seen some delays on Ethereum's roadmap in the past after things have not exactly gone 100% in testing, okay? But the fact that we're seeing a lot of these things go pretty smoothly gives me more confidence in a Q3 timeline for 2022. So that being said, this is an insanely hard thing to execute. Anybody who's worked on this has infinite amount of respect in my view. I'm not trying to be critical here on like timelines and delays. Software is incredibly hard to build, notoriously hard to estimate. And when you're talking about public blockchains, you just multiply that problem by 10,000. You know what I mean? Based on everything I was saying a second ago, with the amount of with everything that's at stake, okay, when you're talking about merging a blockchain with another, making a change. Because even if you, let's say hypothetically speaking, that if you made a change and it didn't work and you rolled it back, right, there's going to be so much confidence lost in that project that any assets associated with that, like Ethereum or Ether cryptocurrency itself, could potentially just tank in value. So even if your funds on the network aren't, quote unquote, lost forever, you could still have a huge dump in the ETH price if the launch doesn't go well. Because whenever this happens, basically, it's sort of like a rocket, sitting on a launch pad. And every time you watch that on TV, there's sort of this sinking feeling that, like, hope this thing goes off. Like, hope it doesn't blow up. You have a high degree of confidence that it's going to work because of everything that's gone into it. But there's always this, like, what if? So we're going to definitely see a lot of that going into the merge. But yeah, I have a high degree of confidence that this is going to go smoothly, successfully, high degree of confidence that everybody's worked on this, immense amount of respect for all the teams. But I don't think we're shipping in Q2 of 2022. Let me know what you think down in the comment section below. Somebody says ETH is basically pulling off the greatest pull request in recorded history. Yeah, pretty much. So what site is that? So I'll put a link to it in the live chat replay right now. Okay, so let's look at lots of other updates that have happened in the space since yesterday. So somebody's saying inflation at 8.5%. Let's go. So yeah, let's talk about what's going on with inflation. I don't want to just talk about like macroeconomics all day because sometimes that bores people on the streams. But it's relevant to what's going on with crypto right now. So let's actually kind of take a quick look here. We can kind of intersect this with the crypto markets as well. So basically, Wall Street opens higher after CPI data. All right, so U.S. stock indexes or indices, I guess however we say it, bounced on Tuesday after data showed consumer prices rose largely in line with estimates, taking pressure off mega cap growth and technology stocks that were hammered by expectations of aggressive U.S. interest rate hikes. So the Dow Jones rose 104 points or 0.3%. S&P rose 25 points or 0.5% at the open. Okay, so yeah, basically we got CPI numbers out yesterday. And I think we're seeing, some confidence return back into the marketplace because things either met people's expectations or were not like crazy bad beyond people's expectations. Now, that being said, 8.5% still not very good. But lots of people were expecting this to be worse than that. And I think that's one of the reasons we're seeing, not this absolute bloodbath after, or, you know, it's basically a market's pricing things in ahead of time. Okay, so we can actually kind of take a look at that. So, I mean, this is very relevant to crypto because, you know, crypto is definitely following tech stocks quite a bit. So if we look at like NASDAQ 100, all right, what's happened? We got a little bit of a bounce here. Seeing a similar type of thing in crypto. Let's just take a look here. Seeing a little bit of support hold here in BTC. Okay, so you know, in terms of what's going to happen next, you know, it's hard to say for sure. Yeah, I talked yesterday on the video about how, you know, short-term things looked a little bit bearish for Bitcoin and other crypto assets. All right, you know, of course, my long-term thesis has not changed, but the fact that we got this rejection off the 200-day moving average, we did not hold the bull market support band. But if you want to look at something optimistic, is we are holding some support, you know, through here. You know what I mean? So if we can bounce off these levels, continue to try that again, you know, that's optimistic, because you could definitely see this being a, you know, you could definitely see us gaining ground through this type of thing. Oh, I'm sorry, my marker there. But we'll have to wait and see. All right, I'll have to wait and see. I mean, the likelihood that we're just going to go into some crypto winter or something like that, I'm still not sold on that idea. I know lots of people are scared of it, but I just don't think it's going to happen. That being said, in the short term, don't know what's going to happen either. Long term, super bullish based on all the tech that we're building. At the end of the day, like if you're new around here, if you haven't heard me say this, basically my long-term thesis is always that we're creating technology that has real benefits to the end user, and that, you know, generates demand for the technology itself. And insofar as the cryptocurrency is, you know, associated with that demand can accrue to the crypto assets themselves, and therefore the value of the crypto goes up because they have, you know, a predictable supply, but that way the sound economics. Okay. And yeah, we're talking about a technology that's getting adopted twice as fast as the internet was at the same number of users in the late 90s. And you know, when adoption rates continue to go up on a long-term time horizon, in my book, that means number go up, and, you know, nothing about that has really changed in my book. With any of this short-term stuff, you know, the people who are going to make it for sure in crypto are going to be those who are here for the long haul and to watch that adoption cycle take off, you know, for the better part of this decade in the 2020s. You know, so that's where my time horizon is. And yeah, totally. In the short term, really hard to tell. It's a bit of a random walk to get there. But I definitely do think, you know, I'm hoping at least we can see some support here. So, yeah, I think, like I said, you know, some of that's based on CPI data. I think we've seen some of that, you know, some of the balance. I think some of the correction recently definitely had to do with tax selling in the United States, what's been going on with international conflicts, monetary policy, all that type of stuff. So let's talk about couple other things here. So you got a couple questions in the chat here. Somebody says, crypto, you have to look at the macro level, day and month, you go crazy. Absolutely. Somebody says, in fact, ETH 2.0 merge will not fix gas problems. Somebody says, ETH is screwed for gas problems. This will be their downfall. So there's one true statement in that. There's two false statements in that. One true statement is that Ethereum 2.0 merge is not going to fix these gas fees. I actually said it earlier in the video that I was going to explain that more. I'll explain it more now. So basically, whenever the ETH 2.0 merge happens, all it's going to do is Ethereum's going to become proof of stake. We're going to get a couple of benefits, but improving gas fees are not going to be one of them. All right. So how do you fix that problem? Well, that's what you use layer 2 scaling solutions for. Okay. So basically, this is where you build a second layer on top of Ethereum and you do a lot of the network activity there. And then you use Ethereum security model below it, like you're like piggybacked on top of Ethereum to work, basically. So you can look at the usage of this. You can look at like l2beat.com to track what's going on with layer 2 scaling solutions. Some of the top ones like Arbitrum, Optimism. All right, DYDX is moving up there. ZK Sync, lots of others. Okay, the ones I'm definitely most excited about are the general purpose layer 2s, where basically developers can, build whatever app they want to and move it over to the layer 2 scaling solutions. That's a lot like, it's kind of like its own blockchain in and of itself. Okay. So it's a different like application-specific layer 2 where you're building a layer 2 specifically for an app like DYDX. It's great, it's awesome. But I'm just thinking like there's so much more potential, in my opinion, for general purpose layer 2s where people can do whatever they want to with them. And of course, we can still see what's happening with layer 2s here. This is TVL. TVL is not a perfect metric. You can see it and US dollar terms, ETH terms, all that type of stuff. Somebody says, like ETH, like I said, ETH doesn't fix the gas fee problem. Another solution has to be built to fix it. But yeah, that's what I was saying. One of those statements is true and the other statements are false. So ETH is not screwed. ETH actually has quite a bit of potential for it, especially with layer 2s. It's been the vision for Ethereum scaling for a long time. Because think about what happens whenever you try to scale blockchains without a layer 2. How do you do that? What's your answer to that question? Basically, we've seen lots of strategies for this. You can increase the block size, and then what happens? Basically, you start filling up blocks on a blockchain with all these like low-cost transactions that nobody cares about, and then you end up having this bloated state that nobody can actually manage on their own computer. And then what happens? Validators start to become centralized. People can't run validators anymore, and then you got like, 12 or 14 different computers running your blockchain. That's no good. And of course, people will turn around and say, well, ETH, you got 32 ETH to stake, and, that's going to preclude a lot of people from staking. The difference is basically, Ethereum, because it went through proof of work mining distribution, ETH supply was distributed pretty widely among a lot of different people. Sure, a lot of them sold, but the whole point is you had a long time to get 32 Ether basically for free, or very low cost, or you could have just bought ETH for 32 Ether for not that much money. I mean, on the grand scheme of things, right? When ETH was $80, $100, I was buying ETH in the $100 range. Sure, it sucks to chunk down, a few $1,000s for a validator, but that's way more attainable than, $100,000, whatever it's going to cost when people make the argument that ETH is too expensive to run a validator now. So, so what are you going to do? You're going to create a fast, cheap layer 1 blockchain that's centralized? Not going to work. Especially running a node isn't very user-friendly either, though. That's true. Let's see here. So at the moment, how many ETH2 nodes compare the number of miners? We can actually look at the number of ETH2 validators. Let me just pull up the statistics here. We can look at how many ETH2 validators are currently running here. Let's just look. Hold on. So I got to log into my account so I can actually pull up the statistics. So basically somebody's asking me how many people are running validators on the network. That's a hard number to get at, accurately, to know how many unique individual people are doing it. But let's just look at the number of total validators, because at the end of the day, here's the thing. If you're running a validator, you have to have 32 ETH to do it. Now, let's say you want to stake more than that. So let's say you want to stake 64 ETH. Well, you got to run 2 validators. All right. You want to stake, even more than that, right? 96 ETH, 128 ETH, all that type of stuff. You got to keep adding validators. So if somebody's got a big stack of ETH and they want to, stake it all, they got to run multiple validators. And so when you see the validator count, it's going to be a lot smaller than the number. It's going to be a lot bigger than the number of people actually running validators. So you got to read some literacy into that, but you could potentially do some analytics to determine, try to figure out how many people are actually doing it. Let's just say here. But I'll look at the actual number of validators here. So all right, here we go. So the total number of validators at this present time is, let's just see here. About 350,000. We've seen a big spike up since the beginning of March. We were sitting at about 300,000 at the beginning of March, and then now we're pushing 350,000. So 50,000 in about a month. So another thing to understand is like this is going to be, this is going to be growing because of the nature of the beacon chain right now. So benefit to jump now as a single validator. Basically, so here's the thing to understand. If you're going to run a validator, there are definitely lots of risks you need to understand. In which if you go stake your ETH right now, it's pretty complicated. Like you send it to the beacon chain. You got to set up your validator. You got to wait to be activated. There's a queue. All right. And once you deposit onto the beacon chain, you can't get your money back until after the merge. And there's going to even be a dead period after the merge where it's still not liquid. Okay. So you got to understand that 100%. There are definitely risks associated with this. There's slashing, risks. So, if your validator stops producing blocks, you can start to lose some of your ETH that you're staking. That's what proof of stake is for. The whole idea is that you're staking. You have something at stake. You're putting it out there. You're risking it to help secure the blockchain, and you have skin in the game, and that keeps you from, basically putting bad data onto the blockchain. The whole idea is we want economic incentives to act honestly. People don't want to lose money. So how do you maintain a public ledger of valid transactions that people can trust? Well, you penalize people if they try to lie. Okay, that's the whole reason. So you could do that with mining. They don't get paid if you're sitting there running a computer, or you could do it with staking, where you actually have to put, money into the skin into the game. And if you lie, then we'll take some of your money away. But if you act honestly, we'll pay you, right? That's the whole incentive. Somebody says, this market has put me on a spam and ramen budget. It has a way of doing that. It's okay. Think about how good, that ribeye steak's going to taste after you, once things turn around again and you're in the green. Somebody says, can somebody tell me again why we have to pay taxes? Yeah, I'm with you 100%. Somebody says ETH has been converted to 2.0 for 1 million years. Yeah, it's been a while. Trust me, I'm ready for it to arrive as well. Somebody says, is L2 the same as EVM compatible? No. So you're going to have other blockchains that have nothing to do with Ethereum that are marketed as EVM compatible. So the whole idea is that you can write Solidity programs or Solidity smart contracts, and they'll natively compile onto their network. Or another way of saying that is their client software for their blockchain is based off of the Ethereum virtual machine or the EVM. That's EVM compatibility. So, I mean, there's benefits to this. Like if you write smart contracts and you put them on Ethereum, that means you can put them on these chains. And honestly, I don't really have like animosity towards other blockchains. I mean, you know, I use them when they're useful. I just think the big grand vision for a decentralized smart contract platform where that's a hallmark value, I think Ethereum has the best shot at you know, becoming that long term. Scalable, fast, decentralized, the scaling trilemma, and secure. How do L2 on-ramps work on chain bridges but services like MoonPay? So it depends. Like what we really want to see essentially is you know, on-ramps that support withdrawals directly to layer 2s. So some people already support that. Like if you go look at like, you know, the ZK Sync website or something like that, you can look at who supports, you know, ZK Sync already. All right. So let me see if I can find it. Okay, so if you go to ZK Sync's website and you pull up like, you just go to ecosystems at zksync.io, you can see like who supports it. And so you already got some mobile wallets in there, like Argent supports it. Okay. So essentially what they're doing is they're just plugging their app directly into the ZK Sync network itself. And so if you have an on-ramp that supports layer 2 withdrawals, what's going to happen is whenever you click withdrawal, your funds just automatically go to that. And I think that's necessary for big layer 2 adoption long term, okay? But in the short term, you know, people need a way to get in these ecosystems and not wait for all this support to happen. And that's what bridges are for. Or, yeah, most of them are called bridges. A lot of people are trying to stop calling themselves bridges because bridges are kind of getting a bad rap for exploits. Somebody said at current situation with Dev, would you risk all your ETH that merge will not be delayed 2023 or bomb? So, I mean, I'm not going to give financial advice, but, you know, the question is, I'll just tell you what I personally do. I mean, am I going to stake all of my ETH? Not right now. You know, just because, mostly because of the liquidity. There's just risk involved with that, right? Now in terms of just like selling ETH because I'm worried about what's going to happen with the merge, not doing that either. So ZK Sync question mark. So ZK Sync is a layer 2 scaling solution for Ethereum. It's based off of zero knowledge based scaling solutions. So what is that? So you can see different, you know, different layer 2 scaling solutions here. Like on L2P.com, you can see what they're called, like, you know, optimistic rollup, ZK rollup. So ZK rollup, how it works is essentially you can use something called zero knowledge based cryptography to improve scaling. So that's not what scaling is in the first place. This might be a little bit of a long-winded explanation, a little bit off the cuff, but let's just talk about it. So how could you scale anything? So what's the bottleneck for scaling blockchains? So to increase the amount of transactions per second, how could you do that? Well, you can do it lots of ways. One strategy would be basically just allow more data to come in at the same time. So every time you know, include a block, instead of having like, let's just say for easy numbers, 1,000 transactions, now you could add 2,000 transactions, right? But we talked about that. The problem before is if you just decide to add more transactions, what's going to happen? The size of the entire blockchain is going to get really big and it's going to grow really fast. And pretty soon it's going to be double the size of whatever it is now. And it's going to be really hard to run a node, which means fewer people can do it, which means it becomes more centralized, which is kind of antithesis of decentralization. So another strategy for that, instead of adding more transactions, is to include more information in each transaction without increasing the number of transactions that, hit the blockchain. So how could you do that? How could you minimize the amount of information inside of each transaction? Well, you could include a bunch of information about a bunch of different transactions with the same amount of data footprint. So that's where zero-knowledge scaling solutions come into play. So how does that work? Well, zero-knowledge cryptography essentially is the idea that you can prove that something is true without knowing all the information itself. So let's say that you wanted to prove, so let's say you want to go to a website and prove that you're a certain age, but you don't want to reveal what your age is, okay? You go to a Wine Spirits website and they want to say, are you 21 years or older? With a zero-knowledge proof, if you had something that knew all your information about you, your name, your date of birth, your address, whatever, you could just consent to that website to prove that you're over 21 without telling it how old you are. That could retain some of your privacy. The app gets the information it really wants to know is, are you of legal age? You could prove that cryptographically, but you wouldn't have to reveal that information. So that's what a zero-knowledge proof is. Now, how does that apply to blockchain scaling? Because that's a whole different concept over here. But you have to understand how zero-knowledge proofs work before you can see how they apply to blockchain scaling. Well, you could prove that a transaction is valid cryptographically without knowing all the information about the transaction itself, okay? And so basically, that's how a lot of zero-knowledge scaling solutions work. You can increase the amount of transactions that get confirmed by the blockchain by reducing the amount of information that gets stored in blocks on the main Ethereum chain itself, okay? Because all you got to store in there is not all the transaction information, but just the validity of a bunch of different transactions. And that footprint is pretty small. So that's a roll up. You roll up a lot of different transactions, you reduce the footprint, and all you have to store is the validity of those transactions on the main Ethereum chain. You get the security of the entire network based upon that, and that's how you get a zero-knowledge roll-up, and that's how you scale a blockchain. You make it faster because you're allowing a lot more transactions to become valid in the same amount of time. Okay, so that was an unplanned explanation, but that was something that was prompted by the chat here. So that's all I got for today. As always, smash that like button down below for the YouTube algorithm. Subscribe to this channel if you haven't already. That really helps these videos out so that more people can learn about blockchain. And if you're as fast at this technology as I am, you want to get your hands dirty, how can you get started today? Well, you can go to my YouTube homepage. You can find my free courses there. They're like Udemy courses, but they're totally free. And if you like those and you went to the next step, or hey, maybe you want to take a master shortcut entirely, I can show you become a blockchain master step-by-step start to finish over at dappuniversity.com/bootcamp. You don't have to be an expert to get started today. I've helped people with zero coding experience become real-world blockchain developers in a matter of months. So that's all I've got. And until next time, thanks for watching.